overheads, these three are treated as product cost.
Product cost, okay.
And on this slide, we have combined them together to say this is the total product cost, which is direct material, direct labor, and direct variable manufacturing overheads.
Yes.
Because these three are the combination of product cost under marginal costing.
Under marginal costing.
Yes. So if we produce period cost, it will be like we just said 1, 2 and 3. So fixed manufacturing overheads, variable selling overheads and fixed selling and administrative overheads, because these are period cost under marginal costing.
Yes.
We know these two very clearly.
Yes.
But because we are talking about marginal costing, any cost which is fixed in manufacturing goes under period cost.
Period costing. Yes.
So we have totaled these three down here to calculate the total period cost.
Okay. Yes.
Right? And then we have produced the income statement.
So sales less.
Sales
Yes.
less variable cost of sales.
840,000.
It gives you not profit, but they use a new terminology under marginal costing. They
Right.
call it as contribution.
Yes.
So sales, take away variable cost of sales, which we have already calculated as a total product cost.
Yes.
You take that out, it gives you contribution.
Yes.
You take out another variable cost.
Yes.
It gives you the contribution margin of taking out all the variable cost.
Yes.
And the final bit, you take out your fixed cost
Yes.
and it gives you a net profit. But what we have to understand and appreciate here is there is a different method of calculating the same thing. And that is students are more interested in. So if I put the same figures in a different way, I would just say, I'm just taking the figures directly to understand. So
Yes.
we'll say, if you look at sales, it's 200, it's 2 million. If we look at product cost, which is variable cost product, which we have totaled on the top, that was 840. And if I take that out from this,
Yes.
I'll get, be happy with that.
Yes.
If I go back to the previous slide and it says this is the total period cost 737,500, and if I say take away total
Period cost.
period cost,
Yes.
which is 737,500, it's
Yeah.
gonna give me profit. So this term is known as contribution.
Yes.
Once we have calculated contribution, we'll take out the total period cost.
Yes.
And it will give us the final figure of the profit, which is 422.
And this is marginal costing.
That's marginal costing.
Okay. Marginal costing includes both fixed and variable costs.
Yes, marginal
In
costing.
manufacturing.
Marginal costing takes variable costs
Yes.
in the product cost,
Yes.
whereas they take fixed costs
costs.
under the period
Period
cost.
cost.
That's the difference.
Yes.
Because next, when we're going to look at the absorption costing, you will only realize the difference is that we have taken something out from here
Yes.
and we have placed it here,
Okay.
and that's it basically.
Yes.
So the answer is still going to be same.
Yes.
So if I just quickly go to the next slide, where it's the same question, what we have looked up.
Yes.
The only difference you will see is that when they have calculated the product cost,
Yes.
they have added 4 things to it.
Right.
So 3 things same. So direct material, direct labor, variable manufacturing overheads are same.
Yeah.
The extra bit we have added was a fixed manufacturing overhead,
overheads,
because
yes.
we said in absorption costing,
Yes.
we take anything related to the manufacturing
Yes.
comes under your product cost.
Yes.
Because that's manufacturing.
Yes. Even though it's fixed. In
Even though
absorption.
if it's fixed.
Yes.
In absorption costing, that's the difference.
Yes.
Because marginal costing, like the other name says, it's a variable costing.
Yes.
It only concentrates on the variable elements.
Yes.
Whereas absorption costing, also known as the full costing, which takes into consideration the variable and the fixed
And the
element
fixed element.
as well.
In relation to manufacturing.
Absolutely. Just to understand the final bit of it, I would just say that how we tell students to understand this concept, saying that, like we said, we are producing the bridal gowns, right?
Yes.
We know the material,
Yes.
we know the labor,
Yes.
and we know the threads and the buttons and all that stuff that goes in.
Yes.
This element is, if I am producing that dress in this room,
Yes.
for this room I am paying the rent and I am paying the electricity charges.
Yes.
These two are my fixed, but manufacturing, because without that I can't manufacture the dress.
Yes.
Absorption costing says that
Yes.
when you are calculating the cost of the dress,
Yes.
you should take some element of rent and some element of electricity in the dress.
Yes.
And this is what it means by taking fixed manufacturing overheads as a part of a product cost,
Yes.
because we are associating it with the product.
So then the only difference really in terms of the absorption and marginal costing
Yes.
is going to be in the part in the income statement
Yes.
which calculates the gross profit. But even then, the gross profit is going to be the same.
Gross profit is, yes, in that way you're saying it's going to be same, but it's same only up to that point
Yes.
where you have sold everything you have
Yes.
produced.
Yes.
If you haven't sold,
Yes.
because the sales going to be less than what you have produced,
Yes.
when you calculate cost of sales, it's going to
Yes.
make the difference.
Yes.
And that's where the question comes in place.
Okay.
Because if it's a straightforward question and they just give you figures and say calculate income statements,
Yes.
you just produce this and
Yes.
that's it.
Yes.
You have dealt with it.
Yes.
But the tricky bit comes in when we're looking at the opening and the closing stock.
So if we're looking at the absorption costing, can we see how that compares directly
Oh
to this?
yes, why not? Why not? So moving down here. So what are the couple of differences between them? I'm just going to pinpoint that. It says sales less cost of sales, not the variable cost.
Yes.
Because this cost of sales includes your variable cost
Yes.
and the fixed manufacturing as well.
Yes.
And they have totaled it somewhere down up here where they have taken 4 of them together.
Yeah.
And that's your cost of sales.
For absorption cost.
Yes, for absorption
yes.
costing. And in absorption costing, we don't use this term contribution. So this
Right.
contribution is for marginal
So
costing.
that's going to be gross profit.
Yes, that's going to be gross profit here.
Okay, so the variable overheads then go in your administration.
So these both
Yes.
are your period costs.
Okay. Yes.
And you come to the net profit.
Yes. So
So this part is similar to this part.
yes.
The difference is that we have taken the fixed manufacturing out from here
Okay.
and put them
Yes.
up here.
So the bottom figure down below is your
This
net
one.
profit.
Yes, so it's going to be net profit here. Yes.
So
we don't find gross profit in there.
yes. Yes.
So we found contribution
Yes.
and we go directly to the net profit.
So when we're looking at this, really,
Yes.
I mean, when we're looking at the administration charges in the administration in the income statement,
Yes.
we can see really it's where, from my perspective, the absorption cost for the variable selling overheads goes into the administration part in terms of calculating the net profit after the gross profit.
Yes.
Whereas the contribution then for marginal costing is seen as a contribution and not the gross profit.
Yes, because out of that contribution, there is still the manufacturing element
Yes.
that's missing.
Makes sense.
So that's how we understand the basic concept
Excellent.
of the
Yes.
two different types of statements.
Yes.
As long as we have understood the performer and the terminologies that's being used
Yes.
in manufacturing units.
Yes. So
This
when
is-
students are answering this question, I
Yes.
presume that you will provide a something for the students to calculate.
Absolutely, there will be a practical question.
Yes.
Last time we looked at the case study of Zara,
Yes.
and we have given students a question where they have to produce 25,000 of t-shirts,
Yes.
and that was all budgeted figures.
Yes.
And the CEO asked my management accounting managers to say, should they go ahead with the project of manufacturing these t-shirts or not?
Yes.
And then they asked you produce the income statement under 2 methods.
Yes.
And that's what they have looked at. So it will be a practical question
Practical
given.
question. Excellent. Okay, that's fantastic. And is there anything else to add on that?
Yeah, the only thing I would say, these slides are available to you, And if you go down these slides, they will also show you the calculation of if you have an opening stock, how you deal with this.
Yes.
If you have a closing stock, how you deal
Right.
with that.
Yes.
And that's basically that. It's
Well, that's been absolutely amazing. I really feel I've learned something here today in this short period of time. That's been fantastic. I think that
yeah.
I'd like to say thank you to Shavita for this.
It's my pleasure.
Absolutely superb. And I hope everyone has enjoyed it today. And we look forward to seeing you again. And thank you very much. Let me just shake your hand.
Thank you. Thank you for having me. Thank you. It's a pleasure.